Live from Singapore, this is Insight with Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Investors today grappling with two competing headlines. One, an escalation in tensions, and one in de-escalation. China and the U.S. announcing high-level trade talks will happen in Switzerland later this week, led by the U.S. Treasury Secretary and Chinese Vice Premier. Scott Bessent has been calling the current tariffs unsustainable, but elsewhere we're seeing dangerous developments in the conflict between India and Pakistan. India launching what it calls targeted strikes on terrorist camps inside Pakistani territory. Pakistan in turn saying it shot down 5 Indian military jets and accusing India of killing civilians. Analysts expecting the region's financial markets to be jittery over the military action when they open shortly. Let's do a check on how Asian markets are doing. They are in positive territory, bearing in mind that those talks within the U.S. and China in terms of trying to de-escalate trade tensions are set to take place over the weekend in Switzerland. We're taking a look at where we are trading in terms of the CSI 300 index, up by 0.4%, getting a boost also from what the PBOC did just moments ago in cutting rates, trying to lift the economy, pretty much dipping into the tools in the toolkit. The Hang Seng also gaining right now, up by about 1%. In terms of the FX space, we're seeing the yuan trading at 722.34 at this point in time. We have the PBOC keeping the currency steady. In terms of that fix, it is pretty much in line with expectations. And we're seeing, of course, keeping an eye on how it's going to open in India, in particular on the back of what we saw just overnight. Now, speaking of India, former Indian envoy to Pakistan G. Parthasarathy and longtime South Asia analyst Michael Kugelman will be joining us in just a moment with their insights on the latest escalation between India and Pakistan. Plus, high-level trade talks within the U.S. and China are set to begin this weekend in Switzerland. We'll discuss the latest on the tariff war with our panel of experts. For insights on how the markets are handling these two developments, Bloomberg Analyst strategist Mark Cranfield joins us now in the studio. This conflicting escalation and de-escalation, what's top of mind for investors?
Well, the big surprise today really is the extent to which China went with their stimulus measures today. People knew the press conference was coming. There was some optimism because the People's Bank of China were there. And if you think back to September, when China really started to ramp up the stimulus, it was led by the PBOC. So there was some optimism that there would be some good sound bites coming out of them. People were surprised at how far they went in terms of cutting interest rates here. It's not just the RRR, they've also gone to the extent of the SLF as well. A few surprises there and quite extensive. And there's a few other measures coming in to support markets as well. It looks as though they're also going to provide a bit more money for specific market buying in the equities as well, which again is a slight surprise today. So clearly, this is not necessarily a big bazooka, but it's quite impressive, and it's more than people were expecting today, partly why you're seeing the Chinese equities respond quite well here. So
bigger than anticipated measures from the PBOC, yet when you take a look at the markets, there was some retraction of some of those gains. Suddenly there's a bit of disappointment. Explain that to us.
I don't think too much of that because of the way the markets work. They gapped higher, and so when you have a market that starts at a much higher level than it was on the previous day, for short-term traders, that's usually something they want to exploit. So I think we can probably look past that. Really more importantly is how the markets finish today, particularly if you look at the Chinese tech stocks, the gauge that we have in Hong Kong. If it finishes anywhere near where it is now at the end of today, that means it's completely reversed all those losses it had after Liberation Day. That's quite an impressive signal to people that things are really restoring on the positive side as far as China is concerned. They're looking to their domestic economy. They're doing what they can. Investors will be reassured by that. So that erosion of losses is pretty good for the market.
Traders are also keeping an eye on Indian assets. We're seeing, the rupee in the offshore market in the positive, but that's not quite a true reflection of what might happen later on.
It's always very hard to gauge because that offshore market at this stage of the day is relatively small. Once Mumbai comes online, market's much deeper. People can get a clearer picture of what happens. It wouldn't be a big surprise if there's a knee-jerk response, bit of selling of the rupee, bit of selling of Indian equities. The problem for macro traders is how to make money on a sustained basis from big news like this. over the past couple of decades, we've seen many times when it's a shock related to North Korea or other parts of the world. And from a trader's point of view, it's hard to short those markets and really make money. The one that did stand out was when Russia invaded Ukraine, because it was clear that was going to continue for some time. People could be more confident that this was a theme and a trend that would develop. If it looks as though India-Pakistan is going to go on for a long time, people will probably want to be more defensive. But for now, they'll be holding back because they won't be sure that this is a lasting theme.
So wait and see. Mark, thank you so much for that. Bloomberg MLive strategist Mark Cranfield. More now on the India-Pakistan conflict, with India conducting what it calls targeted military strikes inside Pakistan, and Islamabad saying it brought down 5 Indian jets and multiple drones. New Delhi has not confirmed those planes were shot down. This follows tensions over the killing last month of 26 civilians in Kashmir. We spoke to Pakistan's defense minister about the escalation.
We have downed 5 Indian planes. Pakistan Air Force has shot down 5 Indian planes and multiple UAVs. And there are checkposts on the control line. A couple of checkposts have been destroyed. So this is the latest as for what is happening on the control line or international border between India and Pakistan. As for the attacks of Indian Air Force are concerned, on 7 different locations, 2 in independent Kashmir, 1 in Muzaffarabad, other Kotli, and 5 other locations in Pakistan. Giving this impression that these places had terrorist camps. Well, I have, invited the international media and our local media to visit all these places and see for themselves if there are any terrorist camps or terrorist outfits on these locations. The civilian population has suffered. A lady has been martyred, a child has been martyred, and few other, casualties have been suffered by Pakistan, civilian casualties. And 2 mosques have been destroyed.
Mm-hmm. The question right now that's hanging here is, how far is Pakistan willing to go here?
It all depends upon it. This has been initiated by India. If India is ready to back down, they have taken the initiative. We have just responded. We have been saying all along in the last fortnight that we'll never initiate anything hostile towards India. But if we are attacked, we'll respond. If India backs down, we will definitely wrap up these things, But as long we are under attack, under fire, we have to respond. We have to defend ourselves.
Minister, part of the reason the world is so concerned with this conflict is because your nation and India are both nuclear armed. How do you prevent this conflict from escalating before either country starts talking about nuclear deterrence?
Well, this is a huge risk, when 2 nuclear powers are, confronting each other. And we do not have any intention of using a nuclear option. That is just something which guarantees our sovereignty.
And that was Pakistan's Defence Minister Khawaja Mohammad Asif. And Bloomberg News continues to reach out to Indian officials for comment as well. Now let's bring in our panel of experts. Parthasarathy is a former Indian envoy to Pakistan and joins us from New Delhi. Also with us, longtime South Asia analyst Michael Kugelman. Gentlemen, good to have you with us. Ambassador, let's start with you. Put this Indian attack in perspective for us. And do you think this is just the start of further attacks on Pakistan?
Look, let's be very real. I've been in Pakistan. I have many friends there. This attack is a part of the lunacy of their present army chief. And really, it's not something their politicians can be fond of. but General Asim Munir is a megalomaniac. His former army chiefs, whom I have known, are mature people. So we are dealing with them knowing well while the government has sensible people, the army has a maniac. And in Pakistan, the army calls the shots. Well, we will deal with it properly. We're not interested in any escalation or nuclear weapons, but we will deal with it. We already have dealt with it to the extent that we wanted. We've knocked out some of mostly the terrorist camps, and that's what it's all about. And really, for me, as far as I'm concerned, this is peanuts for us as far as expenses are concerned. But an already bankrupt Pakistan is headed for worse bankruptcy. And we are going to play it cool. We've done what we had to do. We've taken out terrorist bases and some of the bases on the border. And Pakistan, if it continues with terror, will continue to face the similar actions from our side.
Of course, Pakistan, as we heard from the minister earlier on, said that it was unjustly attacked. Michael, let's bring you into the conversation. It is a response we've been waiting for from India, but it does seem like in terms of scale, it is much bigger than most anticipated and much bigger than what we saw back in 2016, 2019, perhaps.
Yeah, that's exactly right. This Indian strike was not that surprising in the sense that the Indian government had been telegraphing its intention to retaliate from the moment that that horrific terrorist attack happened in Kashmir last month. There was a lot of pressure, domestic pressure on the Indian government to do something big, and it did. It's not unprecedented in the sense that, indeed, we have seen cases in recent years when India has responded to attacks on its soil that it blames on Pakistan by carrying out airstrikes on what it describes as terrorist sites and terrorist infrastructure. But indeed, what stands out about this crisis is the scale and intensity of these operations. I mean, this is some of the highest intensity strikes that India has carried out in Pakistan going back quite a few years. And clearly for Pakistan, which claims that it had nothing to do with the attack last month, it sees this as an unwarranted provocation. And so in that sense, it's not a surprise that Pakistan has responded with muscle as well. We're still trying to get a sense as to what exactly that Pakistani response might look like. I mean, as you note, the Pakistani government has claimed that they downed several Indian aircraft. We'll see exactly what happened. But I think that the escalation risks are much higher in this crisis than they were in the last few. And in fact, I'm very concerned about the possibility for further escalation just because of the scale and intensity of the Indian strike and the Pakistani response. And one has to hope that eventually cooler heads will prevail in both capitals. But I think one might also have to look at the possibility of external involvement, external mediation. I think there are a number of countries that would want to position themselves to play a role in that, especially if there is further military hostilities. If India were to respond to this recent Pakistani response, that I think really would set the possibility of escalation very high.
Ambassador, we heard Michael saying that he is concerned about an escalation, yet India says the attack is non-escalation. What do we know, whether both sides are talking with each other or not?
We always have channels of communication to talk, and generally the militaries do talk to each other in such circumstances. But let me say one thing. Once we've entered this, we've done it with a clear intention to tell Pakistan that it will pay a price if terrorists attack from their soil, attack Indian territory.
Where do you see this conflict going from here, Ambassador?
Well, I leave it to the Pakistanis to decide. We have done what we had wanted to do. If they want further escalation, it's their funeral, not ours.
And what do you make of the validity of the comments from the minister earlier, talking about how Pakistan downed 5 jets? Is there any indication from the inner circle that you are familiar with that this happened, or how many jets there might be?
Let me tell you, I've known the Pakistanis and lived long enough there. The government must be loathing what the present army chief is doing. I don't think people like Shehbaz Sharif want to get into a conflict with India. This is purely the act of one lunatic, their army chief, Asim Munir.
And in terms of how Pakistan is possibly looking at it, Michael, I mean, what might its next step be?
Well, I mean, we still are trying to get a sense as to how Pakistan has responded to this point, because I think that'll determine what comes next. But you know, there'll be high-level meetings that top Pakistani officials will have, and you know, the army chief will be a big part of those meetings because, as the ambassador said, he calls the shots on everything that happens. You know, I think that the question is, would Pakistan reach a point where it feels that it could claim some type of victory, so to speak? And so if it's true, and again, I don't think this has been verified so far as I know, but if it's true that some Indian jets have been downed by Pakistan, that might provide an opportunity for Pakistan to say, well, look, we did something here. We could claim victory and now look to come back from the brink. But you know, temperatures are very high in Pakistan, as they are in India, in terms of the mood. A lot of anger in the two capitals. So you know, as the ambassador noted, you know, there's always going to be communication channels that remain open, even when official channels are closed. As I understand it, the crisis hotline that the two militaries use in these countries during crises have been open and have been tapped into in recent days. That's really important. So you have to hope that the two sides will keep talking on high levels to try to figure out ways to de-escalate this crisis sooner rather than later.
And Ambassador, temperatures are high, stakes are also high. Both are nuclear powers. Both have about 117 nuclear warheads. We've heard from the minister earlier, Pakistani minister earlier, defense minister earlier, that you know, they're not looking to use that option. How is India looking at that?
You know, India has a policy of no first use of nuclear weapons. We will never be the first to use a nuclear weapon in a war. I think the Chinese also have a no first use doctrine. So Pakistan is, I wouldn't blame them. As I said, I have friends there. As I said, they're stuck with a lunatic as their army chief. He prays and goes for namaz and to the mosques to pray to down India. So with that sort of a person, you should bear in mind, it is not the democratically elected government which has a say. And I know both the Prime Minister and his elder brother, who was Prime Minister earlier. So let's cool it as far as I'm concerned. And in the course of today, we will get a full reaction of what has happened in India. But as far as I'm concerned, there was aggression on Indian soil, and we have taken retribution. If Pakistan wants to escalate it further, well, it's up to them.
Michael, what can China do? Some say that China is a third party in Kashmir. It can influence what happens. What can China do, and how much is it willing to do?
Well, you know, I'm not sure if China can do that much in this case. China, of course, has a very close relationship with Pakistan. It's one of its top arms suppliers. But China has, of course, a fraught relationship with India. It's a strategic competitor. It's a rival. I mean, they have made efforts to ease tensions in recent months, China and India. But when I think about third countries that might be able to get involved in a productive way here to help de-escalate, China is not a country that comes to mind for that very reason. You have to look at those countries that have strong ties with both India and Pakistan, or are able to exert leverage over both India and Pakistan. China doesn't have that capacity. I think that the Saudis do, the Qataris do, the Emiratis do, They both have very deep relations with both countries. They supply India and Pakistan with a lot of energy and other assistance. And if you look at the recent history, India and Pakistan negotiated a border truce more than 4 years ago. That was mediated by the UAE. So China is a critical player in so many global contexts. But in this particular case, I'm not sure what it can do, though clearly China, like so many other countries in the world, wants a de-escalation because it has important assets, investment, infrastructure in Pakistan. It's trying to create opportunities to do more investment in India. So the last thing it would want, for many reasons, is an all-out war between India and Pakistan.
And Ambassador, what are your thoughts on what the U.S. might be able to do in terms of de-escalating the tensions between India and Pakistan?
Look, I think we have told Pakistan now that there is a price to be paid for fomenting terrorism on Indian soil in Kashmir and elsewhere. We are not going to take this nonsense any longer of any sort of disaffected person walking across and being sent back duly armed and trained in Pakistan. And in this case, may I also add that most of the guys we've killed are not, someone who's from India or has a dissatisfaction with the Indian government. These are hardcore Pakistani militants. And there is a limit to what we will take. Our response will be careful, calculated, proportionate.
Former Indian envoy to Pakistan, Parthasarathy, and South Asia analyst Michael Kugelman, we thank you so much for your insights today. And of course, our subscribers can also turn to the terminal for more on this developing story. T-Live Go is your function for the latest updates, plus commentary as well as analysis from our expert editors. And as we speak now, we have Hong Kong's dollar HIBOR falling the most since 2008. And of course, that's on the back of the HKMA intervention. HK dollar HIBOR falling the most since 2008 after that intervention from the Hong Kong Monetary Authority. Well, still ahead, China ramping up efforts to shore up its economy as trade talks are set to begin with the U.S. We get expert analysis from our panel of guests next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. India starts trading in about 15 minutes from here after it carried out strikes on terrorist infrastructure. Words that it said at 9 sites in Pakistan, but didn't specify which ones in particular. Of course, this is in response for that attack in Kashmir. Futures pointing to a higher open. Nifty futures up by more than 1% right now. And in terms of volatility, it is also trending up by about 4%. We're keeping an eye on the Indian rupee trading at 84.62 as we speak. It is down by 0.2% versus the USD. India, of course, conducted military strikes against terrorist camps in Pakistan. Meantime, we're also keeping an eye on Chinese assets as they go to lunch. That's on the back of the PBOC cutting that RRR reverse repo as part of a slew of measures to boost the economy. The Hang Seng currently up by 0.6%. We have the HS Tech in the negative, lower as we speak, down a 0.1%, and the Chinese yuan trading at 7.22. The PBOC keeping that fixed steady today. PBOC cutting that 7-day reverse repo rate to 1.4% from 1.5%. Then we also have confirmation the U.S. and China will hold trade talks later this week with Treasury Secretary Scott Bessent and Trade Rep Jamieson Greer meeting the Chinese counterparts in Switzerland. Bessent spoke earlier with Fox News, saying the current tariffs are not sustainable.
The world has been coming to the U.S. and China has been the missing piece. I was going to be in Switzerland to negotiate with the Swiss. Turns out the Chinese team is traveling through Europe, and they will be in Switzerland also. So we will meet on Saturday and Sunday. And look, we have shared interest that the this isn't sustainable, as I said before, especially on the Chinese side. And 145%, 125% is the equivalent of an embargo. We don't want to decouple. What we want is fair trade.
Let's get insights from our panel of guests. Sean Stein is president of the U.S.-China Business Council, a nonpartisan organization of more than 270 American companies that do business in China. And we also welcome Aoifinn Devitt, senior advisor and global market strategist at Monitor, which manages $40 billion in assets. Sean, let's start with you. Of course, the news is a step in the right direction.
Yeah, this is enormously positive. I think this is more than a step in the right direction. I think this is coming a little bit as a surprise. We had expected there to be talks in some form, but to have both Secretary Bessent and Jameson Greer traveling to meet their counterparts in Switzerland is really quite unprecedented. If we look at all of the talks that are happening with other countries, this is the first time the U.S. has actually traveled for talks. So it shows both sides are placing an enormous amount of importance on this. And I think, with 3 days of talks between the two of them, expectations are very high that there'll be a positive outcome of these discussions. So it's enormously important.
Well, Sean, chances are the talks will take a very long time. Are you perhaps just a little bit too optimistic?
Yeah, well, I think that, again, you don't put Secretary Bessent and Jameson Greer on a plane to fly, all the way to Europe to have these kind of discussions, only to have the outcome be essentially nothing or an agreement to talk again. And so I think that there's going to be a lot of pressure on them to be able to announce something that's going to have a positive effect on U.S. markets in particular and on global expectations. The world wants to see that the U.S. and China are talking, and so that's important. But again, if at the end of this, I think there's a range of possible outcomes. On one side, a possible outcome, the most negative outcome would be, the talks break off and there's no announcement of future talks. But I think a reasonable outcome and a reasonable expectation would be that the two sides agree that the approach with China is going to mirror the approach for the rest of the world. And what happened with the rest of the world? With the rest of the world, Liberation Day, reciprocal tariffs were announced, and the U.S. immediately paused them so they could engage in negotiations. And so it's reasonable to expect that a similar approach could happen with China, and that the negotiations or the tariffs could be paused for 90 days while the two sides negotiate. And I think almost anything less than that is going to be seen as a disappointment by markets and by observers. So I think both sides have made a really courageous political decision to meet, but now expectations are high. And if they aren't able to deliver, I think we'll see a strong negative reaction in the markets.
And even we are seeing that strong reaction in the markets. The question is really whether that is sustainable. It is quite easy to disappoint them.
Yes, I'd say that's the case.
It's quite easy to disappoint them.
Aoifinn, go ahead.
Yes, I think that's the case. And if we look only at the Japanese example, when the Japanese delegation came to Washington and left without a deal, and there was a little bit of confusion in the aftermath of that as to what exactly the objectives were, I think we can safely say there that there is a lot of precedent for 3 days not being long enough. I think markets have already reacted positively to the relaxation potentially of tariffs with China. We saw that from the rhetoric in the aftermath of Liberation Day. And that really was what precipitated the 9-day rise in markets. So I'd say that actually quite a bit has been priced in. We do expect at this point that the current levels will not be sustained. And I think in a way, markets are priced to perfection for there to be tariffs essentially much more relaxed than today. So I am watching this carefully. I think we have to look at China's macroeconomic advances already. They are getting ahead of any potential weakness in the economy by cutting rates, which is exactly what President Trump wishes the Fed would do today.
The thing is, even as we talk about a step in the right direction, we have China saying it will not sacrifice its principles. We also have the U.S. saying that it wants to see some decoupling still. What does it all mean for risk assets? Does it go to the positive or the negative? How should risk assets, how should we be looking at the prospects for risk assets right now?
It's a very difficult juncture, I'd say, right now. We've had this unprecedented 9-day streak followed by a period of weakness. We know that there is tremendous uncertainty, and today's news has not yet been around India and Pakistan, has not yet been digested by US markets. It's important to remember the Vice President, J.D. Vance, was just in India. I think he's sort of heralded very much an opening and a strengthening of US-India relations, but yet none of this was really forecast. This still comes as a bit of a surprise on the geopolitical front. So I'd say that's going to send a bit of a shiver through markets. This was not a front. We were expecting to see hostilities emerge between two nuclear powers at that. So I'd say more uncertainty. We know the weekend has been filled with news flow from the US, tariffs on the film industry, reopening of Alcatraz. The flooding of the zone continues, and I think risk assets are poised for the same kind of volatility that we've seen. And after 9 days positive run, we're poised for more volatility, I believe, to the downside.
Sean, in terms of your members, what would they like to see immediately? What would be deemed a success, a quick success?
A quick success would be on the U.S. side. The U.S. side pausing tariffs on the same terms that tariffs were paused for the rest of the world after, so-called Liberation Day. And on the Chinese side, it would see the Chinese side doing the very same, and that would be reversing the reciprocal or their retaliatory tariffs. But the broader issue, I think, is that what they also need to see is they need to see some certainty in the market. That if what we see is we see a rollback of the Liberation Day tariffs and then the retaliation, but 2 weeks later we see perhaps tariffs imposed on China due to Venezuelan energy purchases or Iranian energy purchases. There's the 301 penalties on China over shipbuilding. If we see a continued escalation of other tariffs sort of being put on China, then that would bring a whole lot more instability back into the market, and that's what we don't want to see. So we want to see a pause announced on both sides, and then we want to see a cessation of new and additional tariffs and other things being added to further complicate these already difficult economic relationship between the two countries.
And even, how are you looking at the gyrations in the FX space? I mean, there is expectation that the US dollar will continue to weaken from here. How might that play into the decisions that you make as an investor?
It's a fascinating question, and I think that has been a little surprising. Despite the rally in equity markets, we've still seen a weakness in the dollar, a suggestion that we were saying before of this exit of foreign nationals from US assets, a general preference for other safety assets such as the Swiss franc and even German bunds versus, say, US treasuries. So that movement is continuing. It's at the margin. It's not affecting the demand for US equities. I'd say we as an investment house are thinking about always our global exposure. We feel this has been vindicating our non-US exposure, our non-dollar exposure, because it's really there for the long term to provide for diversification over the long term. And that has played out. It's been a difficult thing to justify for the last 10 years even, but it has now started to play out. So I wouldn't say we're making any changes at the margin based on the dollar weakness, but we are rebalancing and continuing to maintain that non-US exposure.
Great insights. Sean Stein, President of the U.S.-China Business Council, and Aoifinn Devitt, Senior Advisor and Global Market Strategist at Moneta. Well, still to come, we check the market reaction to the escalation in the India-Pakistan conflict as the region's trading day gets underway, plus the latest developments as we go live to Karachi and New Delhi next. Keep it here with us. This is Bloomberg. We're counting down to the India Open. Of course, it is front and center after India conducted targeted military strikes against Pakistan, which responded by shooting down 5 Indian jets. These are the numbers in the pre-market session. Negative territory for the Sensex, down almost 1% right now. Well, let's get market insights with Ranodeb Roy, founder, CEO and CIO of RV Capital Management, which manages $1 billion in assets across Asia. Ronnie, good to have you with us. What do you make of how the markets will respond to the attack?
Well, it's very early doors. Just to keep it perspective, it just happened a few hours back. Well, the first thing is, given any a lack of response yet from Pakistan. It's too early to say. But from our readings of what happened in either 2008 or 2019, most likely there's going to be a muted response and hopefully an end of any further tit-for-tat responses. Either way, we think the market is in a good situation to absorb the volatility given the current circumstances. So we think, in general, the rates markets will be a muted sell-off, if at all, and that would potentially be an opportunity to buy. The equity market probably is slightly more vulnerable given the valuation concerns of Indian equity markets. And then, of course, in general, in these kind of circumstances, the rupee depreciates, but we are in a soft dollar regime right now, so that too may not happen as much.
Is it fair to say that when it comes to the rupee, its direction is more dictated by the yuan than anything else?
Yeah, I mean, yuan is obviously an important factor, but I think the dollar index in general obviously is an important factor. India's trade-weighted index has many other countries apart from China, obviously. And in this particular circumstance, given the tariff situation, India seems to be a little bit ahead of the curve in the negotiations. So that would also bode well for a muted volatility in dollar rupee.
Earlier, you talked about how that could be opportunities to buy. What in particular, what would you be looking to buy?
So if you look at all the asset classes, to us, the government bond market in India and the rates market in general in India seems cheap. We are at roughly 2.5% of positive real rates. The RBI targets roughly a 1% real rate. If you assume the credit spread of India government is in the 50 to 75 basis points range, and you subtract that from 2.5%, that's still quite cheap from a standard deviation perspective. So inflation in general has been going down. The monsoon forecast has been okay, and so we expect inflation to remain in RBI's comfort zone for the rest of the year, and therefore there should be a few more cuts coming in the ensuing meeting. So in general, the Indian government bond, if it sells off, sorry.
Ronnie, what's a few more? What are you anticipating in terms of monetary easing from the RBI?
So obviously the Fed will play some role, but in general, I think at least 2 more rate cuts to be expected. As I said, real rates are quite high for India, and the RBI has moved from an inflation control mode to a growth protection mode, so at least 2, if not more.
What's the best way to hedge at this point in time, Ronnie? I mean, we have escalating tensions closer to home in terms of Indian investors. We also have that uncertainty in terms of talks between the US and China, although there seems to be signs of de-escalation. How do you protect against the risks that we're seeing?
So firstly, I think the market has already de-risked a lot in the last, call it few months, given the build-up to the Liberation Day tariff and then the big volatility that happened in April. So people have de-risked, people are light. So I don't think people are rushing to get on more hedges as we speak, as today's muted response shows, right? Already the Sensex seems to be, flat for the day. So I don't think people are rushing to get hedges. But if one were to put on hedges, the dollar rupee has come off quite a bit from the highs of the year a month and a half back. So dollar rupee topside could be a reasonable hedge, and it's not very expensive to put that hedge on.
Ronnie, thank you so much for that. Ranodeb Roy of RV Capital Management. Now, more on the escalation in the India-Pakistan conflict. India is saying it conducted targeted military strikes against Pakistan, which says it shot down 5 Indian jets in retaliation. The tensions follows a militant attack last month in Kashmir that killed 26 people. For more, Bloomberg Pakistan Bureau Chief Fassi Mangi and South Asia Economy Editor are here with us. Fassi, let's start with you. What's the sentiment on the ground? What's the latest that we're seeing there?
Thank you, Haslinda. What we're seeing over here is that, Pakistan then, has retaliated, and what it's saying is that it has shot down 5 Indian planes, and it has shot down some checkposts at the border as well. That's what Pakistan is saying. There's no confirmation on that from India's side right now, but the defense minister spoke to Bloomberg TV a few hours ago, and he was quite clear that, they're open to stopping stuff over here. They're open to not taking it anywhere else, and he was also quite clear that, nuclear is not an option. So we're not seeing where we go from here is, I think, the biggest question mark. Is it stopping here? Is it going to continue? I think that's what the markets are looking at right now as well.
We know that the National Security Council will be meeting at 10 a.m. local time. Fassi, what can be expected?
I think, the first thing we're expecting is a very strong statement. And if you may recall that Pakistan took a lot of decisions since the Kashmir tragedy, that, Pakistan downgraded diplomatic ties, and it closed airspace for Indian operated or owned airlines. All of that was taken in a similar meeting. So if any major decisions are to be taken, it will be in this meeting, and we're expecting a statement after the meeting with some strong wording at least.
And Ruchi, what is the sentiment on the ground? Many say this attack was expected. It was a long time coming.
Oh, absolutely. This attack was on unexpected lines, but definitely shows that there is an intensification of the confrontation between the two nuclear-armed nations, and which is why you can expect some tough talk by India as well. In about 30 minutes from now, we will hear from the Indian Army as well. And later in the day, you have the cabinet meeting that is going to be headed by none other than Prime Minister Narendra Modi. Remember, he had vowed to retaliate. He had said that he would be punishing the perpetrators of the heinous attack in Kashmir that killed 26 people. And, this attack, as the military said this morning, while it was a restrained move from them, they said that this was something that was a long time coming. Various global leaders have reached out to both India and Pakistan. You had the U.S. Secretary of State Marco Rubio reaching out to India as well as Pakistan and calling for more restraint and dialogue and calling for a peaceful solution for it. India had said that they had targeted nine targets in Pakistan and Pakistan-occupied Kashmir, and this is being seen as one of the deepest strikes that India has conducted since the 1991 war. One, of course, needs to see whether there will be an escalation of this situation further, but we're keeping a close watch on that. And while there is, of course, nervous here, back home, and you can see that in the Indian markets as well, which have opened lower this morning.
Ruchi, we heard from the Defense Minister of Pakistan saying that Pakistan shot down 5 Indian jets. Any confirmation? What's been the reaction from India on that?
Well, we've not heard anything from the Indian government just yet. We had heard only there was one press release that was put out in the early hours of Wednesday morning, where they had said that they have conducted the strikes and this was a very restrained action from India, but no confirmation on the kind of retaliation that we've seen from the Pakistan side. We're expecting that there will be some clarity that will emerge in the next few minutes. You will hear from the Indian Army on more on that, and that is where what we're kind of keeping a close watch on.
You got to wonder how much is at stake for India, Ruchi. I mean, this is one country that is set to benefit from the disruption in supply chains and the tension between the U.S. and China in terms of trade.
Well, absolutely. This couldn't have come in for a worse time for India. India just yesterday concluded its long pending FTA with the United Kingdom. They are in talks with a trade deal for the US as well and are hoping for early wins. Also, remember, the Indian economy has been slowing, in the last year, and even this year it is expected to grow at just about 6.5%. While we've seen the RBI, go ahead with the rate cuts. But one thing is clear, that the Indian economy is pretty weak at this point of time. So going into a larger conflict is not ideal in this case as far as India is concerned. And even for Pakistan, remember, they have the IMF loan coming up. The executive board of the IMF will be taking up the $2.5 billion loan for Pakistan on the 9th of May. So clearly not a good time for both the economies.
Thank you both for your insights today. Bloomberg's Pakistan Bureau Chief Fasim Mangi and South Asia Economy Editor Ruchi Bhatia. It's been 10 minutes of trading in India. Let's do a check on how it's panning out for the Indian market. The rupee in particular is front and center. Of course, we saw some weakness in the currency earlier. In terms of the equity market, the Sensex in just slightly negative territory, along with the rest of the benchmarks like the Nifty index. Bear in mind that we're seeing gains pretty much across Asian benchmarks. That's after signs that it could be a de-escalation in trade tensions between the U.S. as well as China. We're also keeping an eye on how it's going to shape up for Pakistan after that attack from India. This is how it's looking. Futures pointing to a lower open. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.